a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. Considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
We're about 4 points away from all-time highs on Nasdaq. Thank you.
At 218.
Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
All right, so it just touched all-time highs right here at 18.25. Let's see if we can get price to trade above it.
From the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs,
actually, no,
if they were
yeah,
sustained,
it touched
could weigh on
218.75.
economic activity.
That was the current
Given that
all-time
you
high.
said you believe policy is restrictive and the Fed is now dialing back that restriction.
So let's see if we can get price to trade above it.
Presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: yeah, we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
It's you get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular, and so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. when it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's
Oh my
economic projections
God.
in September,
What the
you had written
fuck?
down 4 quarter-point interest rate cuts in 2025.
Man.
Do you still think that those are
yo.
likely? Is that sort of the baseline
Yeah,
outlook
what's
at
up,
this
bro?
point?
Like,
or has
dude.
that shifted? And if it shifted at
Like
all,
prices hit my
can you
break
give a little
even
bit
like 10 million
detail as to
times
why?
right now, dude. Like, what
You
the
know, I can't,
fuck?
we don't fill out a
Like,
we don't fill out
dude,
an
what the
SEP, and
fuck?
I can't characterize one
Damn.
that wasn't filled out today, so I can't really speak for kind of exactly where the committee is. I would just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects
Yo, I didn't even.
As you know, we're in the process of
I saw the.
recalibrating from a fairly restrictive level at 5.33%.
I saw the rate,
Today's move,
or when the numbers came out, I didn't see how
ourselves, is that where we need to be?
It came in as
price
Trying to
reacted
steer between the risk of moving
with
too
Powell
quickly
getting up there
and
speaking.
perhaps
it touched all-time highs, man. Well, we're like we were 2 ticks away from and
to be on a middle
bro.
path where we can maintain
All right,
strength
bro.
in the labor market
All
while
right,
also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because
Bro.
we don't fill out an SEP.
This
at
thing
this
has
meeting.
been touching my break even all fucking day.
that. I
Man.
guess when
Like,
it comes to
no matter
your own
how high
thinking,
it
do you
gets,
think
it
that
runs right back to my break
point of
even.
rate cuts in
What's up
2025
with
is a
that?
reasonable
You didn't-
outlook.
You didn't get out at the high?
We're going to wait and see how things.
Because I got like, dude,
in December. I mean, it's just.
I needed to get to
I
like
would put it this way.
20.
We're on a path
25.
to a more neutral.
I need to get to
stance.
25.
And that's very much what we're on. That has not changed at all since September. And just gonna have to see where the data lead us. We have a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say.
Should reposition.
I mean, shit. Where can I reposition at? My break even's at the bottom. Like, this thing keeps coming back to my break even.
You know where the committee
As
will
it
be.
pumps, take your profits and then take it short.
And
Thanks, Howard.
I do that, then all of a
I
sudden,
wanted you to please elaborate exactly changes in the language of the statement
You
here.
know how we do.
In the first paragraph, when you say inflation has progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was
Yeah, I needed a
2% goal. Is there any policy substance
break from the market. Plus,
in language? Is it
Powell,
meant to open the door to
or
a
reaction to his speech is kind of
anything about the sticky
mild, to be honest. I mean, because it wasn't nothing really a surprise, so
no.
that makes
So-
sense. Yeah.
Most of further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What are you doing? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path to 2%. So that is what it's really all about. It's not meant to send a signal. Neither of those is meant to send.
You building a clubhouse or something?
Saying further progress is because
Oh, my bad.
I don't think it's a good time to be
I didn't know y'all could hear all that. My
forward
bad.
guidance. You know, there's a fair amount of uncertainty in that, in what I've said.
Nah, I'm about to,
The path that we're on, we do know
about to watch this freaking dog.
know the right pace, know exactly. So the point is to find the right pace and the right destination.
He's staying.
We go. And I think there's a fair amount of uncertainty about that. And, you don't want to tie yourself with,
Yeah, the reaction is pretty, looking at it, is pretty mild, to be honest.
Yeah. I mean, price was just basically moving back and forth in this little area right here.
Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind
Man,
the recent
Nasdaq is
rise
just
in
playing with me
interest
at this
rates? And
point,
is
man.
that are rising deficits a concern to you?
She's just playing with me at this
So
point.
we don't comment on fiscal
I know
policy.
she is,
And
'cause
again, I don't have
I've
a lot
never
more to
seen
say
price hit
on
one fucking
what's
spot
driving
10 million
bond
times for
yields.
no reason.
In terms of policy, let me give you a sense of how this works.
Yeah.
Case. let's say
Well,
Congress
you know
What's up,
what happened to
Mohammed?
considering a rewrite of the tax laws. Doesn't matter what's in the contract.
my MFF position. I was just trying to test out Quan Tower.
I think we see the outline, so we'd start
Oh,
to
I got tested already.
wait, and then it's at a certain point.
He said, "Come back tomorrow."
So you can say, you know, these are the likely.
Better luck next time. Come back tomorrow.
On the effects of policy changes on various parts of the economy.
I'm not going
So
to.
we try to get smart on that, and then the law.
I
Actually
mean, unless
passes,
MFF
and,
comes
you
out
know,
with
you
another
start to put
competition
it- you
account
probably run
and they
an
force you to only trade
acceleration before
Quant
that
Tower,
happens, just to
I would
keep
not buy
people
a Quant
trying to
Tower
understand
account.
it. Then when it actually passes, it goes into the model.
But this
Yeah,
shit,
I gotta
along
get.
with a million other things. So, you know,
I gotta get used to the platform.
I mean, many things are
it's
affecting
just
it
too
at a given
complicated for no
time.
reason. Like it should
And,
not be
you know,
that complicated
law
to put a
change
trade on a
of
chart,
some
bro.
kind would go in.
You saw me struggling trying to log in.
Clearly, the legislative
I'm
process.
like, oh, I
takes-
figured it out.
And of course, the real
Took me
question
like
is
10 million years
that law,
just to log in.
all of the policy,
And then, yeah, I'm like, well, how do you place a trade? Because I haven't used it in so
all
long.
effect on the economy at a given time. So I think that's a
Since back when Top Step was having their issues and you were kind of forced to
through all the time with every administration.
use either that or Ninja Trader.
Just this.
Did they have like a setup walkthrough? Because
there's nothing. There's nothing in the
MFF didn't have a
model right now.
walkthrough. I had to look
It's
through
such an early
other people's
stage.
videos on
We don't know
YouTube to
what
try
the
to figure it
policies
out.
are.
To kind of figure
And
it out.
once we know what they are, we won't get a sense of
Oh, yeah, I don't know. I couldn't tell you.
all those sorts of things. So I think I would just
Got to figure it out with trial and error,
doing that
but
now and all
Yeah,
the
he got to figure it out,
details,
Alfred.
and it will be very much regular order.
With, yeah, do a lot of trial and
when we
effort.
do that.
He had to go get his
I can just follow
master's and
up on this.
PhD to figure it out.
You feel
My
like
doctorate.
being against that they go
and then I get, once I figured it out, I
see
get clapped.
being restriction to the economy, or do you just
It's
take
like,
it as
oh,
a given and perhaps
welcome-
that you should
Welcome to Quant Tower.
Look, I just think
Clap.
DLL.
first question,
Clap.
the 5% people were drawing.
Thank you for your service. Welcome to Quant Tower.
You know,
I'll see you tomorrow.
10-year was 50 basis points lower. So,
Like, well, I mean, I should have known
changes in
better. I literally
fast that are
put on a trade just to literally test it out,
No,
and I'll end up long in the
What
top.
we've seen so far, you know, we're watching.
I mean, shoot, man, like,
we're
dude,
doing
man,
positions and reading.
I just hate the
but
fact that when I
right now,
finally
it's
go
not a
long,
major factor in
like
how
it's like the Nasdaq is like, yeah, you should have went long earlier in the stream instead of trying to short me. Now it's like, dude,
Thank
all
you,
the
Chris
the short
Reaver,
scalps I would have took if I took them now. Like, god damn, like,
mentioned the
damn.
positive economic data that we've seen since the September meeting, including things like savings, higher GDP growth. We saw stock
Hey,
today.
I said fine.
It's renewed some of the questions about
My fine was like a long time ago. It was pre-market.
in this with this backdrop.
Because I'm like, I'm not in too deep.
You're right.
I know this got a lot of upside potential. I'm like, well, y'all not trying to short it right now. Fine.
A great thing, and
Fine. I'll go
so our
wrong.
mandate is maximum employment.
And then
All
a few
right.
minutes later, that's when I sent you that picture.
Even with
My position.
it's still restrictive. We understand it's not possible to say precisely how restrictive, but we
This
feel
shit need to keep going.
that it
but,
is still
like, come on,
restrictive.
I need
And if you
$200 more
look at our
dollars,
goal
baby. Come on,
variance, the labor
Nasdaq.
market
Let me
is
talk to you, baby. Let me talk to you.
is now essentially in balance. It is continuing to cool, albeit
Fine.
at a modest rate, and we don't need further cooling we don't think, to achieve.
Yeah. When I made the decision to say fine, I knew I wasn't in too
It's
deep.
moved down a great deal from its
There's still a chance.
its
Still some hope.
highs of 2 years ago. Only just, as I mentioned, stable. 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was
All right, baby,
appropriate
come
to
on,
begin to
come on, come on,
recalibrate
come
our
on, come on.
policy stance to reflect this progress.
Seriously, though?
And today's decision is really another step.
Like, nah, I ain't cute. Not about to make me look foolish.
Of a policy stance, we can continue to strengthen the labor market even as enables further progress toward our inflation goal.
What might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So
Okay, man.
we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter,
Okay,
as we
man.
move
All
ahead,
right,
we are
all right,
prepared to
okay.
adjust.
So
assessments of the
this thing on
appropriate issues and
this thing
destination
on
as the outlook evolves.
like the risk
So,
thing,
for
like it didn't even
example,
close out my
if we
position.
were to
And
see
I'm
the
kind of
labor
upset about that.
deteriorating, we'd be prepared.
Like
to
I'm really
move
upset
more
about
quickly.
that. This thing didn't close it out.
as we approach levels that are plausibly
It did not
close
close
to
it out.
neutral, it may be appropriate to slow the pace at which we're
It
dialing
did
back
not close
restriction.
this position out.
Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with
It did
asset
not close this
with
position out,
asset
man.
runoff with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something
All
that
right, man.
we're just beginning to think about.
Didn't close out the position.
Thanks, Chair
It
Powell.
left it open. So I had it on Tradeovate to where
with the noise and jobs
it should
reports that we've
close
seen,
out
when you
after
look
I
at the
made a
Fed's
certain
rate of
amount.
inflation, PCE
It
inflation
passed that
overall is
amount,
2.1%.
and it did not
It's very close
close.
to the Fed's target, but core
It did not
inflation
close this
2.7%.
position.
And it's been that way since June.
Damn, dude. God, got every noise in the background playing.
Well, so I think if you look at the 3 and 6 month, you're quoting the 12 month. So we look
Yeah,
at all
Francis,
of them,
I
but if you
tried,
look at
bro.
the 3 and 6
I had
month
it to where
core PCE, you'll see
I had it to where it was
2.4%.
supposed to automatically
So we look at
close.
all
At
of
least
them,
in the
and we
browser,
look
it
at-
was
we also-
supposed
We
to.
look at 12 as well. But
It
what it's
didn't
telling us
close.
is that we really have made significant progress, and
I kind of needed
we
to get back up
expect
here to
there be
30.
bumps. For example,
I don't know what's going on
the
today,
last 3
man.
months of last year,
I don't
the
know.
core
It just
PCE
seems like
readings were very, very
nothing
low,
wants to
probably
work
unsustainably low.
for whatever
So
reason.
that's why forecasts generally see a
Because I
couple
was
of
up
upticks
about,
toward the
I
end
had
of the
it,
year. On the other hand, the
had it to
January
close at
reading certainly
3,500,
looks
but
like
it didn't do that.
an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall,
Bro,
you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happened.
Wait, you didn't get out of that position?
it was supposed to automatically close, man. Yeah, I mean, I passed the account already. It didn't close automatically.
So let's talk about housing services. Housing services is higher. What's going on there is,
So,
It didn't fill your order or something? What?
You see that I don't have no stop or no target on this, right? Oh, you're probably not even watching. You're not watching.
No, I'm
Taking several
just in
years to
the,
catch
in the
up.
chat.
Yeah, because it kept going down to my break even, so I just closed out my
that's just a catch-up
my stop.
problem. It's not
And I just left it on because you close out your stop. Oh shit! You know what?
Inflationary pressure. So that's one thing. The other thing is I'd say look at the labor market, not inflation pressures. Where is it coming from? It's not about the economy. What is the story? Area. So you're seeing victory, obviously, but we feel like the story is very consistent with inflation continuing to come down a bumpy path.
I keep forgetting
over
about
the
this,
next
man.
couple of
I really
years
keep
and
forgetting
settling
about this, and I
around
hate that I
2%.
forget about
That
it.
story is intact, and it won't be
Okay.
one or
Well,
two really good.
hopefully it doesn't go down to my break even for
months
the
or bad
1
data
millionth
months aren't gonna
time.
really change the pattern at
Hopefully.
this point. Now that we're this far into the process,
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Okay, man.
Hi, Chair Powell. Craig Torres from Bloomberg. 2 questions today. Did you learn anything about what Americans think about the economy?
Hey, can y'all please
from the
refrain from
election
asking him
results?
bearish questions, please?
First question.
Not until I get out of this
Second question.
position.
I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate.
I don't know, man. It sounds bearish.
Measures of unemployment is up about 0.5 point from a year ago. compensation gains are sliding back.
Yeah, Francis, I did the
Fixed
same
rate,
thing.
a
That's
signal
why
of
I'm
labor market
that's why I went
dynamism
full
has
port
been
long.
heading down to
I was
that
like,
bad
fine, if they're gonna
neighborhood of
long
the
it,
20 teens.
then shit,
So
I'll go
you
long
have
then.
put a marker
But then
at
as soon as
Jackson
I
Hole
went long,
saying
now it's
any
like, oh
further
no,
cooling
we actually
is
want to short now.
unwelcome.
We want to short
It
this
is
now.
cooling generally a little bit further. So at what point do we reach what you would describe shortfall?
Yeah, I kind of should have figured she was going to play around like that.
So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. The second one, this is the great question. It's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising. What we know is that it's low. We also know that it's moved up significantly.
Yeah, I had to.
So we've seen a big change upward in unemployment.
Yeah, I know.
Sometimes that has meant
Yeah, I know.
bad
Just imagine
things
if somebody was holding their long since last night.
It appears that the
man.
labor market is fully.
I know. I should have had
I think it's continuing to very gradually cool.
the cojones to do that. But
And
I thought my position was trash last night, though.
to maintain the
in
strength of the
hindsight,
labor
right?
market while also
Right.
progress on inflation.
Yeah.
I thought it was.
You mentioned a bunch of indicators.
I was basically in at 900,
the
but I thought that was trash.
openings
It was
to
898.
employment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned
Shit, we live for
wages.
moments like this and we
Wages are
keep
still,
fucking missing it, man.
just a bit
Hate that.
to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer term trend. That has always been the case for 50 years. But, it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market.
Come on, baby.
We could talk about 20 different
All
data
right.
series.
Cool.
We'll be looking at all of them, of
Cool.
course.
Pass the account. Pass the account.
But
Pass the account. Make sure I'm closed out everything.
The labor market to,
all right, cool.
To soften
Pass
much
the
from
account,
here.
baby.
We
Full
don't think
port.
we need that to
Man,
happen to
dude, the
get
Nasdaq
inflation
was trying to take
back
that
to
win
2%.
away from me. She was trying to take that win away from me. Dude, you see how many times she came back to my break even? Like, dude, it was criminal. I was telling Smith, it was like, man, she came back to my break even about 20 fucking times.
If he asked you
20.
to leave, would you?
And I was
go?
in at the bottom.
No.
Can you follow up on? Do you think that legally
She
you're not?
She even broke
required
that
to
range
leave?
a little bit, and I was like, oh fuck. I almost blew the account because I was full port.
Michael McKee from Bloomberg Television.
And now look at her running.
About,
Man, get the
what the
look
data
at-
are telling you and how
Nasdaq.
you are dependent on the data. But
I feel like one of them guys on TikTok, liberals.
assessments of the economy, CEOs of other country, what you hear from the regional banks about what companies and consumers think about.
Yo,
where the
Nasdaq. Yo,
economy is
look at her
going
go
from
now,
here,
dude. Like it's
rather than
crazy. She
looking
does this shit,
backwards.
man.
And does that match up?
I use
with what your
MFF.
forecasts have
So
been and what
I
you
trade
think
only
the
MFF, and I only
appropriate
trade
policy path should
UProfit,
be?
the swing account.
So
I no longer
hard
trade
to
Top Step. It's a good company. I just
you know,
don't.
really
I
interesting
don't
set
trade it
of
anymore. It doesn't make
discussions we had,
sense.
and of course, you'll see them in the minutes.
Take Profit Trader.
in
If
2 weeks.
you
But I would say this. I think,
have no
you know,
problem with a trailing drawdown on the
comments
funded
from,
side, that's another good prop firm.
Reserve Bank
Apex,
colleagues
obviously,
and
but
from
I only
the
trade
CEOs that
MFF
talk
and
to are pretty
UProfit.
constructive on the economy right now. Pretty constructive, feeling that the labor market is
Thank you for please refrain from asking embarrassed questions.
that much.
Yeah, now y'all gonna ask all the various questions y'all want now.
2 years ago, we were talking about it. So they feel the labor market's.
Yeah, I see it ran up a little bit. Where's the price at now?
Is that like 234? I told you it's gonna probably get to like 230 and drop.
2.8% growth in the third quarter.
Oh, it's dropping.
Well, I mean, it looks like it wants to drop at 230, but I'm pretty sure it's gonna probably find support and keep going.
Where the U.S. economy has been performing with strong growth, a strong labor market, and inflation coming down. We're
Oh yeah, because remember,
better than any
the
of our
Nasdaq is at that
peers. And I think that is
23%.
reflected in what you hear
It's at
from
that 23% right now.
what I hear people CEOs. I don't get to talk to a lot of CEOs in my job. I hear summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive.
So here's the real
That's not to
question.
say
Here's the real question.
There are areas of caution and
oh damn,
and
Francis,
like
yo.
that, but ultimately, overall,
What prop firm are you using? And sorry to hear that. That's why, like on days like this, I don't even touch my funded accounts.
Identified as something you're watching. What would they be?
I just blow through evals and try to pass them in one day.
Geopolitical risks around the world are elevated, and just
that's crazy to hear.
Relatively little.
Why you try to do the same thing?
Economy.
That's so
that can change through the price of oil.
Nah, well, just that I just picked up that MFF account,
those
the
as
starter one,
something that's on the horizon.
With my whole experiment trying to
if you look at the U.S. economy,
figure out Quantower, and then once I
has been very good.
Figure out the basics, I get clapped. So
that's what
I'll be back.
People in expectation.
I'll be back either tonight or tomorrow for that one.
Next year could even be stronger than this year.
See if we can find a good setup in the pre-market and take it into New York.
You know, I'm gonna short the golden zone. I'm gonna put a limit at this golden zone at
policy. Your predecessor
at 280, man.
And Volcker
286.
When they thought
286.
Yeah.
I'm gonna put that.
Economic and financial stability. Will you do that too? And right now we're in a period of
because I think this thing is gonna try to go fib to fib and drop.
At historic and historic highs that are and rising. Is that something you'd speak out against?
So, you know, I have said many times, no more, no less than what the professors you mentioned have said. And what that is that the U.S. federal government's fiscal.
I mean, if this thing keeps going up, I mean, but 230, like 230 might actually be that level.
The level of
we'll see what happens. They got to find support above the 23%. And that does look like a double top, a real double top on ES.
Full employment, and that's expected to
never
continue.
mind.
So it's important that we, you know, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions. Just said it again.
Okay, thank you. I guess the only other question is to follow up on Victoria's question. Do you believe?
You know what? I'll try this short right here. I'll try it.
Fed determined the legality of the president demoting at will any of the other governors with leadership positions.
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president has put out on the campaign trail, tariffs, for instance?
No, I was not referring to the administration's policies at all. So what I'm just saying is, as we look ahead, we know, as I mentioned this in my statement, that the risks are two. I guess I should start by saying that we think that the economy, and we think our policy. Find yourself. Start chance to get inflation.
Hold on, Smith.
So we have to avoid that. Avoid that risk. That risk is weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is the thing where meeting by meeting we're going to be making our assessment of what the right path is. You know, it's not as important the precise timing of these things is not as important as the
But
overall
yeah,
arc
for
of
instance,
them.
kind of going back to what you were saying. Yeah, I went through so many evals today trying to short this thing as it went up. And I really don't know what it is about when we have big moves in one direction.
But as we move further,
it's easier just to go with the momentum of the market, especially if it's bullish news like Trump becoming president. I mean, regardless if he does the job or not, people believe that he will. And that's all people need.
Thank you, Chair
to
Powell.
that's all people need to buy.
Of bond yields.
And
if you look at the break-even,
on top of everybody buying, all the bears are like myself and everybody else that tried to short this damn thing
up at about
is shorting it. And as we're getting stopped out of our positions, it's going higher. So, I mean, this move is being fueled by everybody being buyers.
That longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly
So I just don't know, even though I know this logically, emotionally, it's as I'm trying to tell myself, it's like, dude, just get on the bullish side. Just get on the bullish side. My bare instincts like, no, I want to short this shit. I want to get in at a good spot. And even though I tell myself I want to get out of a good spot, historically, the good spot doesn't even happen on the day it happens. The good spot usually happens on the follow-up day. Like we usually get like on moves like today, we usually do get a drop, but then they buy it right back up. And then earlier in the next session, the high is made in the next session, and then it drops versus trying to get in on the same day that it actually happens. Historically, that's happened. I know that, and I still try to do the same shit. I don't know why.
2022
I don't know why.
Was to avoid that.
Hi, Chair Powell, Kelly O'Grady, CBS News. We just talked about what you've heard from business
Actually,
leaders
you know
on the
what?
economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
Oh, wow. Did this thing just drop when I got out of the position?
We say the economy is performing well,
Whatever, bro.
but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock. And, you know, it stays with you because the price level doesn't come back down. So what that takes is, it takes some years of real wage gains for people to feel better. And that's what we're trying to create. And I think we're well on the road to creating that. Inflation is way down. The economy is still strong here. Wages are moving up, but at a sustainable rate. So it's just, I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, you know, regain their confidence and feel that. And, you know, we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up.
No, some people's feelings need to get questioned
of your performance. Any
because
concern
some people's
about his
feelings are
influence
based
on the
off
Fed's
of
independence?
false realities that don't make sense for real.
I'm not
And they're
going to
not
get
real.
into any of the political things here today, but thank you.
Hold on, what she asked? Oh, wait, what the hell she asked?
Moving up, but
What are we talking about?
So it's just, I think what needs to happen is happening, and for them to regain their confidence and feel that. And, you know, we don't tell people how to truth their accurate. We don't question.
And critical of your performance. Any concern about his influence on the Fed's independence?
Okay, man, you stupid bitch, man. You know we traded, asking stupid questions. Oh, she asking questions about Trump and shit, man. Like,
The political things here today.
will Trump's administration affect how you do your job? Bitch, shut the fuck up, man.
Chair Powell, Nancy Marshall Genser with Marketplace.
All right.
How you gonna answer that?
Yeah.
To see inflation come down.
Like, that's just asking a question.
You know, much closer.
Ask the question. Yeah, trying to be cute. Like, shut up.
Sharp increase
Trying to be
in
cute.
employment that has often accompanied programs of disinflation.
Shut up.
So, knock on wood, we've
Did it
gotten this
affect him
far
last time?
without seeing a real weakening
Trump
in
was trying to get
the
him
labor
to.
market, and we believe we can complete
What are you trying to do? Get him to raise rates or cut rates?
while also
I think it was-
They were already
strong, and that of course is exactly what
trying to get them to raise them. I think, right?
Mhm.
Can you rule out an
They
interest
were already
rate hike
like
next year?
super close to
No, I wouldn't rule
0%.
anything out or in that far away.
And dude, raise. I mean, dude, we was at a negative percent. Like, money was so free.
Expectation is that we'll continue to
Like, dude, like
gradually
that
down
we will
towards
probably
neutral
never
as the
see something
economy
like that in a
continue to grow.
lifetime. Unfortunately, I didn't
fluctuate, but the
understand
labor market
finance
will
and
remain strong
financial
if you look
alchemy
up,
at the time to
that
take advantage
will
of
not change
0%
from
interest
the
rates and shit.
September SEP. That is our
I didn't
baseline
understand it.
forecast, and short of some
Took
exotic
advantage of it on my
that will continue to be our
refinance.
forecast
And did you?
for the
Yo,
foreseeable
congratulations
future.
on that.
So,
Don't ever refinance
but
again.
ultimately, we're not in
I'm locked in at
we're
2%,
not in a world where we can
baby.
afford to rule
Yeah,
roll
that's
things
great to
out
hear.
a full year in advance.
Everybody paying
There's
like
just too much
what's
uncertainty
rates
in what
now,
we
like
do.
7, 6, 6, 7%.
Mm-hmm.
Craziness.
I got in too late.
With
Damn
M&I
it.
Market News.
Got in too late.
I wanted to go back to a comment that you had made about
Man,
Americans
fuck.
being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up?
Yo, what?
No, that's not the way our framework works.
What the hell did she just ask?
Inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And
Yeah, I just feel like people
there
just be
is
asking
that
this man
low
questions just so they got
can
puts
be a
or something.
problem too, in a way, but that's not part of our framework, and it's not something.
Because they
we're
just be asking them
gonna be
all
looking
kind
at
of questions that don't be fucking making sense to be
Thank
asking.
you very much.
They got puts on the table.
It's like, oh, I got
something.
like their friend just asked them, like Texas was like, hey, can you ask Powell a stupid question so my puts can print?
Hey, say no more. I got you. Say what?
So Trump is literally the boogeyman. How will you work with him moving forward? Like, what the fuck? Like, shut up. What are you asking him that shit for? I'm in calls right now, damn it.
Yo, that would be so funny. I bet that's the case for some people.
Man, they be
Some
doing that shit. You said what?
Some so-called journalists in there. Okay, I got you. I'm gonna ask them the dumbest question, and the market's gonna react.
Mm-hmm.
Oh shoot!
But all right, guys. That was fun.
I'm glad you got your dub.
Yeah, cause yeah, I mean, I don't know, man. I don't know how and why I get caught up on days like this when I really should just be trading with the trend, man. I really should be, but my bear instincts just won't allow me to do something like that. It's high. If I'm not going to buy it, I'm gonna sell it.
Yeah.
But this thing could, I mean, this could, dude, this thing is just gonna keep pumping. I mean, usually with ES, I mean, she likes to go and sometimes she likes to go in increments of 20, and then she likes to go to like them whole and half numbers. So my next level is looking at like 15, 14. You know what, man? I'm gonna put
all-time high.
I'll put this at 14.
All-time high ES, all-time high NQ. You finally caught up.
Finally caught up, man.
Yeah, it's been a minute because ES has been breaking all-time highs for what, months now.
Mm-hmm.
He did his NQ, caught up.
Wow.
I'm a little sad that I got clapped before this pump, but we're gonna get it back.
Yeah, man.
Gonna get it back.
And look at us, and look at this thing go now. Look at this thing go. Look at this thing go. Well, my gold trade that I was up $900 just got stopped out. Mm-hmm.
Oh, gold drop.
Yeah, I was in at the top, and I didn't even realize it bounced. I didn't even realize this shit bounced. I had my target all the way down here. I didn't even realize gold bounced like that. Man, bitch, you ain't about to do this to me, man.
You shorted it.
Yeah, I was short like earlier in the day. Yo,
Yeah.
gold is pumping, dude. Like, what's going on, gold?
I know it's pumping with the Nasdaq. It's kind of crazy, and the ES.
Yeah, right after Gameway says that it diverges from itself, from each other. Literally a
I
day after.
mean, yeah, normally they do though. I mean, he's
Yeah.
not wrong
No, he's
normally,
not.
but this is abnormal circumstances. They're like, hey, gold pumping. Like, why would? Hmm, that's a good question. Why would it pump on a rate cut? Lowering interest rates. Huh.
Let me look at gold. Yeah, because I mean, that's why, like, dude, these markets are a casino. It's like it doesn't. I've just come to the realization that sometimes it's going to act right, but majority of the time it's just going to do whatever the hell it wants. That's why whenever I see a setup, I'm gonna take it, regardless of if it's diverging or whatever from another instrument, because it always seems to continuously do this crap. It just never fails. It really never fails. So we'll see. You know what, man? I'm gonna try one more short because right now it is at like this swing high right here. So I'm gonna try one more short. I'm gonna try one more and watch if I go in one, then it's gonna work. Like,
Yeah, as soon as you add size, it's gonna start playing around.
yeah, like what's up with that? I mean, unless gold is trying to make its way back all the way up to like it's 2743.
I might look at gold tonight, low key, when the market open back up.
Yeah, so well, I mean, I guess it's just the one thing with gold, man. You just have to take your profits. I mean, that should be bouncing back and forth. If you don't take your profits, then it does this. Damn it. Man. All right, so I'm not gonna let her play with me like that. So I'm just gonna let it ride and see what happens, because I think she's trying to short here. But I just keep readjusting my stop. He kind of had to be
find it
perfect with
funny.
gold. What's that?
I find it funny that the Fed does this interest rate decision and my mortgage company sends out an email. The Fed just cut interest rates. Save now. Like, we could get you in at 5%. Like, that ain't no say. I guess from previous rates, sure. That ain't no real savings though. Like, get out of here. Like, I know that 2020, 2021 rates.
It was like, man, all right, man. All right, gold, man. All right, man. All right. Fine. Apparently you just pumping. Apparently you on that pump shit too. Now, as soon as I get in, now this thing want to drop, man. Bump this, dude. All right.
Yeah, gold. 7. Watch out if you long. Watch out for 730 though.
All right. Okay. All right.
Oh yeah.
I mean, it is at that. Okay, so I'm gonna try this one more time, but I probably have to reduce and stop trying to go in full port on this damn thing because I'm looking at that swing high right there, and it looks like it wants to touch that. That's all the way up there. 8 more cents. Hmm. Okay. All right. So I guess what I'm gonna start doing with gold is get in with one contract, and if it starts going in my direction, scale into the second one.
Yeah.
I think I'm gonna start doing that because I'll probably have this account just strictly gold. I probably might just have this account strictly gold because I got plenty of accounts, so I can kind of play around with this one. Mm. Okay. Okay. All right. So yeah, gold is probably trying to get to. All right, so it's probably trying to get to like 42. So I guess what I'm gonna do on my swing account is just put. I mean, I guess gold is just better being swung. I guess. But if it's about to go all the way up there, then I might as well trying to get in long on this. All right, man. I'll do it.
Dang, Q. 250. Man, can y'all imagine if I held my position?
Man, shit. If you held that position, a glitch would have happened. It's like, oh yeah, you was never in that position. What are you talking about?
Or, oh, he wants to try to hold, huh? Okay. Birkenhoff. He's trying to hold.
Bogdanov. He's trying to trade professionally. He's trying to hold. Dump it.
He's getting euphoria right now. What do we do? Dump it.
Yo, this thing is still going. Okay, so this thing could possibly keep going, man. Okay, so this is what I'll look for going into the open tomorrow, because this is what usually happens after we get like major news, after we get big moves to the upside. If this is destined to pull back, we will see a move to the upside at open. If this is destined for a pullback, that's what's happened probably all the previous times where it would go into the next session and it will pump and then dump. And then the bulls will find support and then they'll try to reclaim highs and stuff like that. So, hmm. Two. All right, so I got 3, and I guess I'll just trade these other ones. But all right, guys, that's it. I gotta actually get back to work myself. But we'll definitely come back in the pre-market. What time do you usually start?
I don't know. It depends. I usually wait a couple hours, but lately some stuff has been happening around 6, 7 o'clock.
Mm-hmm.
Like good entry points, but I don't know. We'll see. Yeah, we'll see.
Gold. No, you didn't. No, you didn't, gold. No, you didn't. No, you didn't. No, you didn't. Damn it. Well, I gotta learn that this ain't the Nasdaq. I gotta stop projecting her on other instruments. But yeah, so I usually start the same time around 8 o'clock. That's the time I usually get done, put my daughter, set her up, and then I can just come back on stream and focus on this. So yeah, so obviously the stream is focused on, or the goal of the stream is to find entries that we can swing into the New York. I mean, if we can get them to hit, I mean that's lovely. But if not, I mean, the goal is to get them to find entries. So
Yeah. Yeah, that's where the money is. Shoot, we learned that from mine last night. If I would have held,
Hmm.
I'd have been like a 30K play or 20K, maybe. I mean, I only got 4 minis, but
how did they do that?
yeah, I would have had to stay out of the market all day, really, and not look.
Don't look. Don't look. 291. But all right, guys, I'm gonna end it here. We're gonna come back at 8 o'clock. So if y'all want to join us, that's when we'll start streaming. And with that said, peace out, everybody.